I'm late. I'm not traveling like I normally am. There we go. Let me get my screen up. Q is down to 424s. Everything's really, really red today. I don't even have my mouse, bro. I need my mouse. I should have thought. Oh. Oh, man. Sorry. Oh. I'm sneezing. Sorry. Ugh. All right. I'm here. Let me make sure everything's up. I want to make sure y'all can hear the music. I'm not at home right now. Uh so bear with me. Pun intended today for sure. Uh hold on one second. All right, so we're here. We got 80 people here already. What's up, chat? I know I'm late. I'm sorry. I slept in. I didn't think we'd have craziness like this today. But show must go on. Let me know if you can hear the music in a second. Oh, it's not that bad. We're still green. You know, what's really down a lot? Nike, yeah, it's down. Amazon's down. CRM is down. Google. Definitely some brutal red action here. You can see. I wonder if I can get my. Here's the Q. Put the SPY up here. SPY is corrected. SPY is really what's turning down. SPY is finally starting to correct a little bit. What's the trigger of this? I'm assuming Nvidia, right? Yeah, Nvidia down to the 90s. You know, I've been telling people, you know, and let me know if my mic is good. I've been telling people the same like, thesis, which is that, you know, if Nvidia corrects, I've been saying this for freaking like a year now, you know, maybe less than a year, maybe like 6 months. I'll give it. I've been saying the same thing, and verbatim. Anybody that watches my stream understands exactly what I've been saying, which is that I'm not buying up stuff anymore. That the biggest risk to the market are that if Nvidia specifically starts to correct, comes back down to $190, $80 is what I said, 80, 90, 100 bucks. The rest of the market will follow it, and the rest of the market could correct or crash from that, right? Like that's what happens. When everything's weighted to one specific stock, and that stock is up hundreds, if not more, percent. You know, there's risks, and you got to be careful with those risks. Anyways, I'm still green on my portfolio, so I'm still okay. But the markets itself, a little rough. What's up, Lil Petty? What's up, Casey? Cooked. But I think the yen, carry, Japan and UK markets started to sell off. Now people are panic selling. My favorite time to trade. Honestly, I might buy stuff up right now, to be honest. Nvidia delayed Blackwell, but all stemmed out of the jobs report. And then, yeah, so again, last night, or last week, we had so many economic reports. We had non-farm payrolls, we had unemployment, we had the FOMC meeting, we had Apple earnings, we had Amazon earnings, we had Google earnings, we had just so many different earnings reports last week that this report is something that so many people are watching now. A payroll report came in. What could cause this is that rate cut expectations are up a lot. You know, last week, remember Friday, we did have non-farm payrolls come in at well under what was expected. We also had unemployment spike to 4.3%. And so those two things could trigger this as well. Bank of Japan decision on hiking rates caused people with debt over there to sell their positions in the U.S. Okay, gotcha. We're really not down that much, to be honest. Like, we're down. It doesn't look good, you know. But like, we're right here. So here's a daily chart. You know, here's the SPY. So this is today, right here. So like, it doesn't look good, but like long term, we're still in a really obvious upward trend. Like the Q could correct some more. This is with the SPY at 530s though, and the SPY is now at 512s. So the SPY is really here. That's a big correction. It's probably time for me to buy some stuff up though, to be completely honest, and take that risk of the year that we do sometimes. We'll see. but it's definitely red out here today, guys. Looking at other news that shows up. We also have manufacturing and services PMI dropping later on this afternoon. So we're in the global news. Let's see what else we got. Reports that Tesla CEO files lawsuit against Sam Altman and OpenAI. That's one thing going on today. Tyson Foods reported earnings. They posted 87 cents, beat 65-cent estimates, 13.535 billion, expected 13.24 billion. Yet I'm not home right now. Alibaba says price reductions up 59%. Bank of Canada reportedly asked some financial institutions to report daily changes in long-term treasury bond positions and balances, according to Reuters. PBOC reportedly asked some, Japan PM Kishida is going to hold a press conference tomorrow at 1:30 GMT. Appears to be related to some ceremony there, so it's nothing market related. All right, guys. So let me catch up on the chat. I know we got a lot of people talking. Ooh. Yeah, I can carry on wine. Yeah, man. What do you mean correct? Well, a correction just means a necessary pullback. And so if the market's overbought, we need a correction. That's what we want is a correction, bro. Market's overbought, that's what we get. That's what we want. That's what we need is a correction. Honestly, personally, I think the market could have used this. Mixed up 128%. Yeah, I mean, I think the fear right now, everybody panics, everybody's scared. So the whole stock market always goes up. Narrative is a sham. I mean, who says the stock market only goes up? If it only went up, it would be treasury bonds. I guess treasury bonds don't always go up either, but the yield's guaranteed. But I guess my point is, like, okay, let me show you guys some math here. All right, so when you invest in the S&P, right, on average, you're going to get about 20%, or you're going to get about 10% a year, maybe a little bit less on average, I would say, right? So let's call it 9%. So you got 100K, and you invest that 100K into the S&P, 100K. You invest that into the S&P on average, and it's not going to be every year because some years you're going to have stuff like this, right? Like that's why there's a difference between like bond yields and the S&P 500 yields. Bond yields are not guaranteed, so you're going to make less. S&P 500 or bond yields are guaranteed, so you're going to make less. S&P 500 yields are not guaranteed, but the yield is much higher. So over 10 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Investing in the S&P, you're going to take 100K, turn it into about 236K in a decade, right? Q just broke lows again. It's down to 421s. But the problem, the risks, like if this was perfectly safe, everybody would be doing, like, nobody would do anything else because it was perfectly safe, right? Nobody would buy bonds. Everybody would buy the S&P. The risks here is that roughly every decade, you're going to get a major crash or major correction or bear market. You might bear trend for years. Typically the way it works, it's the same every time, but typically the way it works is it looks kind of like this, where's my epic pen thing? Hold on, chat. There we go. Typically the way it works is it looks like this. You go up, you have a big correction. You go up, you have a big correction. You go up. Sometimes this upward long lasts longer. Sometimes it lasts shorter, but you go up, big correction. Sometimes it goes extended like that. So every now and then you're going to get this. Like this is inevitable. You're going to get this. You're going to get pullbacks. It's normal. Especially right now with AI. I think the best thing that can happen with AI is that if it holds some of its gains. right? Like if Nvidia can hold over like $100, and I know it's down to 90s today, so that's not really the same thing. But I think if it can hold $100, it's doing good. You know? So Berlito, gold dumping. Is gold falling down now too? I was thinking gold might have people hedging towards it. Wow, gold all the way down to 2,400. Gold's still up huge. You know, this is a big dip. Everything's down massively. Yeah, let's do a poll. All right, so look, here's a poll. Will the stock market correction, or will this be, will we look back on this as a stock market correction or crash? Vote on the poll. Let me know what you guys think. 84 billion Apple stock sold by Warren. Oh, we also have Berkshire Hathaway. Yeah, market looking scary. Y'all be careful. What's up, Slick Rick? Hate to see what people's 401ks look like. Yeah, but I mean, look, okay. I think you got to be honest about this pullback too, though. Okay, so like, despite all of this, right? Like, here's a yearly chart. Like, I don't really have any sympathy towards a lot of people here, and the reason I don't is because look, we're right here. Like, y'all are acting like, okay, here's the year. Here's a 52-week chart. So this is like the market on over a year's time. Okay. Y'all are acting like we've done this and like we're down on the year and people's 401ks are up in flames and all this stuff. Realistically, the market is still up a ridiculously large percentage. Even if we just look at 2024, like the S&P was at 460 at 2024. It's at 512s right now. And so this might not be as red or as green of a year as we previously thought, but it's not like we are in doomsday scenario here. The SPY's at 512s, you know. And so as well as like the S&P did 24% last year, 24%. And so, you know, as long as people didn't enter the market within the last like year, people should still be fine. In theory, like the market is up enough long term, especially over the last 3 years, to where people should still be okay. It's not like, I don't think this is like a doomsday scenario, even though I'm sure some people are going to act like it is. But again, vote on the poll. I might be wrong. You know, I'm never definitive. I like staying. I like not being definitive. So yeah, it's looking nasty for sure. And again, if we continue at this, we are going to get a circuit breaker halt. How much are we down today? If you don't know what circuit breaker halt is, they will literally halt the market for a period of time if the market dumps too much. So it got so we started off this morning. I don't know if they go by the day. We're just going to go by this candle. No. Yeah. So here's today. We started off at 531.30s on the SPY, 531.30s. We are now down to we'll just call it 531.30 to be even. We are now down to 509s. We'll call it 510s. Just to see when the circuit breaker. I think the circuit breaker is at 7.5%. And then it goes to 12.5. So we were down 4% this morning. 4%. So definitely not a good morning. But still noticeably less than like a major correction or crash yet. But we'll watch it. It's still early. So it's possible we keep coming down. We'll see. And again, I'm going to be buying stuff up. What if you bought the Q in 2021? You're flat. Yeah, I mean, look, it's not good. But again, the market doesn't go straight up. And anybody that acts like it is going to is not experienced in the market. Like, market's not going to go straight up. Like, you're going to have good years and bad years. To be honest, the market has kind of been in the state from AI where it has had a lot more green than normal lately. And so that is going to need to correct. It's not going to last forever. Y'all just be careful. You know? Where's John? I need his calming voice right now. I don't know. Where is John, dude? I don't know where that guy is, man. Where's Bitcoin? Everybody's talking about Bitcoin. Let me see. There's Nvidia. Nvidia, as I thought, sparked this move. Bitcoin at 50K. Wow. Panic. Wow. Interesting. We got almost 700 people here, so everybody's tuning in for the crash. Honestly, the views were back Friday, too. I knew they were back. They felt like they were back Friday. So. But, man, let me look at our poll. All right, so we're 50-50 split on whether this is a correction or crash. To put this into perspective, okay, a crash is something like dropping like 20 plus 25% in like a day or two in a very small period of time is a crash, right? A correction is a longer term red move that is necessary a couple times a year, right? So that's why I'm asking, is this a crash or correction? Crash, massive downside pressure in a very few days, usually trending over 20% drops if it's a crash. If it's a real crash, if it's going to be considered crashes, a crash by market, analysts and technicians. A correction is a necessary move that happens a couple times a year. Like, here's some examples, right? So we put a weekly chart up. You'll see some corrections that we've gotten, not necessarily crashes, but like more so corrections here. So here's one. So you guys can kind of see back on this one, right? This was one that we got, and this one went from 460s down to 410s, right? Like, there was the last big correction we had was right here. But it was years ago. Again, the market has basically gone straight up for years. It was never going to hold these gains like that. Hey, what's up, Joseph? My guy, what's up, dude? Thanks so much. It's a big correction, but I think it'll be rebound. Yeah, the question, I'm trying to figure this out because I don't know whether I should buy it up. Remember, I liquidated a lot of stuff over the last few weeks. So I got out of a lot of stuff. I told you guys like what? Like a couple weeks before earnings season that my portfolio was very light, that I did not feel comfortable adding big size to anything. And in hindsight, I was absolutely right. Now is probably the time for me to start buying stuff up. But if I buy stuff up, I gotta get there's a couple. Number one, I'm not an investment professional. I'm not liable if you lose. Do not copy me. I might have no idea what I'm talking about and be wildly wrong about anything I say. I do trade off stream. Don't copy me. Not an investment professional. Nothing here is financial advice. And don't sue me, basically, is what I'm trying to say. With that said, though, and don't copy me. But with that said, I think the reality is we got two options here. We could be crashing. We haven't even hit market hours yet. And so market hours are in about an hour. We could continue down. As much as I don't want us to, we could continue down. It doesn't mean we're not. The SPY is right around here. The SPY is right here. So this pullback is going to look like this once the day goes. So we are all the way down here. But with that said, it's about the same size as this one. It's definitely a little bit smaller than this one. So like, I don't know. I think when you look at the big picture, it's not cause to panic yet, but you should definitely be paying attention. Anyways, Q testing lows at 420s. I don't think there's any underlying reason yet for a crash. Who held an emergency meeting? Why is the Dixie crashing? Is the dollar crashing with us? Rate cuts. Yeah, I mean, another reason for this crash, the Dixie's down. Another reason for this crash is probably like what I heard from Powell on Wednesday. Personally, what I heard is that we're gonna cut rates. Like with that, with the exception of inflation, like if PCE inflation comes out at like 6%, maybe that's different. But outside of that, we're probably cutting rates next month. And so I think this is probably also the market just simply preparing for rate cuts. Um, you think stocks are going to be on a fire sale soon since it's tanking? Yeah, my poll is literally exactly 50-50, which is interesting. Emergency 50 basis point rate cut this week. I don't know. You know, it's honestly really funny. So, like, views have been glitching out for the last couple weeks, right? And so there was obviously, like, a couple weeks ago, we had an issue with the view counter where, like, views decreased, like a lot. And I was worried about it, but then YouTube sent me a message saying, "Hey, our view tracker is like glitching right now." So I was like, "Okay, cool. It's not really that." And then it came back, right? Well, the last few weeks have been like that, where it's like the view counter has been kind of glitchy. It hasn't been showing my full amount of views for anything. And then Friday it came back, like it started working. I think somewhere over that period of time, my viewership grew, even though it looked like it was down because of the glitch. But it looks like my viewership grew. So welcome, guys, is what I'm trying to say. We'll see what happens. We're gonna trade this live. Like I've got my account right now has got about 400K in buying power. We're gonna try to trade some of this. We're probably gonna buy up some of this stuff too. It's pretty light position wise. Like we're holding some stuff, but it's still pretty light. And if we get a big enough pullback, I am going to start buying this dip. Like I am going to start buying into this because again, if I could dollar cost average over the next like couple months, I could get a nice little. The only issue is that if we do start to bear trend, like if we do have a few years of red action, which can and does happen, like a lot of people that have just entered the stock market and the futures market over the last year and a half, they don't really understand. Like they haven't been around long enough to experience red bear markets, and bear markets are part of this. Like it's not all sunshine and rainbows all the time. We're gonna have red markets, and that's an inevitable part of the stock market in general. And it doesn't mean we're crashing. It doesn't mean it's the end of the world, but we are gonna have red markets eventually. And so I'm going to dollar cost average, probably still keep it kind of light though. Pray this is just a flush. No rate cuts for Powell. Good for you. I don't agree. You shouldn't push stock recommendations on public investors. I don't. You must not watch the channel Back to the Futures, or you're just trolling, which either way, I mean, it's all good. I mean, I'll hate you forever, but like, it's all good. But no, yeah, I certainly don't push recommendations on anybody. Top 3 worst trader of all time right here. You see my disclaimer. I have no idea what I'm talking about, dude. Federal Reserve held an emergency meeting Monday, August 5th in response to a historic correction in Japan's stock market. Yeah, but this isn't a Great Depression either, Jason. This is just a stock market is gonna have bear markets, you know, like it's an inevitable thing. The real thing is like we'll see what happens moving forward. Like I'm assuming they're gonna have, and again, I lightened up my portfolios a lot. If you guys remember, I told you guys over and over again, my portfolio is pretty light. I just didn't feel confident buying up like tech at those highs like that. Like I got a couple small positions, but my portfolio is still very green, and so I'm still green on the year, that is. And so, like, yeah, Nvidia was just too high. And that's what it really is. I mean, I know the yen spurred a lot of this stuff, but Nvidia was just too high. It wasn't going to hold. It needed a correction. I kept saying the same thing. What I kept saying is that if everybody's acting like Nvidia's got to continue up breaking highs, more so if Nvidia just have held sideways, I would have been happy. How selling Apple, my eyes are on open. Yeah. Nothing can stop what's coming. What is your theory on crypto crash and correction? I mean, I'm kind of a big believer in Bitcoin, so I think long-term Bitcoin's going to be fine. But Bitcoin makes massive pullbacks. So Bitcoin can pull back a lot and still be fine. Bitcoin pulled back to like 15K a couple of years ago. It's now at 50, but it was at 60, 65. AI bubble. Yeah, that's probably what this is. It's probably just the AI bubble mixed with like rate cut fears. You know, this is so past due. That's why it's so strong. Yeah, I mean, like I said, people acting like it's the end of the world because we correct some now. It's not. Again, it might be their first kind of big market cycle. I don't know, but again, maybe it is. Again, maybe we're in a crash. I don't know. It's possible. But again, the Q is probably the most affected. It's most tech heavy. And so the Q sitting at 425s. The Q looks like this right now. Definitely a big dip here. But I mean, with that said, like 52 weeks ago, like on a 52-week chart, we opened up way down here at threes, at 360s, 370s. So I mean, we're still up a pretty big percentage for 2024. The real question is, how does the market trend into the rate cut decision next month in September? Q is bouncing back though. Okay, trolls are out. Just banning, saying malware over and over again. You're weird. Yeah, the VIX is at what? Crazy. Let me see. I heard about the VIX being ridiculously high. Look at the VIX, guys. Wow. Volatility is definitely up. I guess the real question is, are y'all buying this pullback or not? I'm not telling you should. I have no idea what you should do. But are you buying this pullback? Yeah, I'm certainly not telling you to buy it. If I do buy it, it's going to be long term. Like, again, there's a couple things that are going to come from this. You're going to hear some people say, it's the end of the world. It's doom and gloom. The world is ending. The sky is falling. And I've heard this many times before, to be honest. And very rarely is it actually ever that. Second thing you're going to hear is that the market's always going to keep dropping. No matter how low we get, you're going to have some people telling you the market's going to keep falling. That's not true either. Typically, after a certain point, and I don't know where, but typically after a certain point, I would say it's time to start averaging into positions. But again, I don't know where that is. Maybe we keep dropping. It all depends. I'm certainly going to wait before I start really pulling the trigger on those, but we'll see what happens. Yeah, so one of the main reasons extreme crowding in popular tech stocks created a, quote, fragile market. High concentration in tech stocks could lead to a sudden and severe correction. He noted that one large hedge fund began selling positions. Cracks in the high momentum trades are visible with declines in key stocks like Apple and Tesla, which have dropped 11.9 and 31% year to date. Economic uncertainties, potential changes in the Fed reserve policies added some market volatility. Signals from the Fed about a rate cut in September have freaked people out as well. And yeah, it's time, guys. The opening bell is going to be freaking chaos, so just be ready. This Buzzle. I need some coffee. Stocks will trim 50% today. I mean, it could happen, but I don't think so. Yeah, I mean, everybody's a little delusional at times. Back to the Future. That's normal. Nobody looks at themselves perfectly objective, you know, and so that's normal. I'm definitely a little delusional. Top three most delusional traders, some would say. It's all good. All this stuff is noise. Yeah, I mean, in theory, you're supposed to dollar cost average into blue chip healthy stocks long term, let compound interest build you wealth and not sell, you know. But again, the reason you dollar cost average is to get around movements like this in markets, because these movements suck if you get caught in the wrong spot. But if you DCA, it's less. Anyways, VIX spiking up to 63. Crazy, crazy, crazy. Somebody's telling me to look in the last 20 years in a daily chart and tell me how many days like this we have. All right, hold on. I can do that. So here's a yearly chart. Today, again, today we're dropping actually. Let me see. We're down to 420s. Yeah, 420s. So I can't really see the day yet. So it's gonna look like this down here. It's gonna be a big candle for sure. But again, let's see if we got any other big candles that don't look like that. I need to get my mouse in a second as well. This is pretty big. I don't know if it's on par, but it's close right here. Like this big drop. Like again, we get corrections like based off of our current percentages. All right, we do get corrections like this a couple times a year. They're definitely not fun, but let's see if we can find some other big red days. Look at this day right here, back in 2020. It's pretty big red, 300 down to 260s in the SPY. There's the Q. Let's see what else we got. It's a pretty big day right here. Look at this, down from 320s down to 3. Smaller percentage, but you got to understand the SPY is also up more too, so the percentages are going to be slightly different. Yeah, that's a pretty big one there in 2020. So let me see a T1 halt. All right, so halts happen. So a trading halt can happen if the index drops below a percentage. If the S&P falls 7% before 3:25 p.m., it stops for 15 minutes. If it falls 7% afterwards, it doesn't stop. If the S&P falls 13% before 3:25, trading stops for 15 minutes. If it falls 13% after, it does not stop. If it falls 20%, trading stops for the rest of the day, regardless of anything. So basically, if we crash, the market stops. Right? Currently, we're in a little flash crash in the market. It's down big enough, but yeah, we'll see. But yeah, those are the percentages. 7% happens once, and then if the market drops again and it doesn't slow the crash down, then it gets halted again. If it drops 20%, it's halted for the rest of the day. Hey, Carol. Hey, Carol, come here. I guess chat, list right now. Do you think we crash or do we think we bounce back? Why is the market freaking out so bad when recession is not official? The market's freaking out probably because of rate cuts next month in September, as well as, again, a lot of the Japanese yen. Crash, crash, war breaking out, bounce. I don't think we bounce today, but I mean, it's possible. I just don't know. If it does, it's going to, or is this healthy? Right, for sure. Honestly, Edison. So like people are acting like it's the end of the world. Honestly, it might be a good thing. Like we kind of need to correct in some markets. The real estate market certainly needs to correct. Right? Like again, people are pushing for rate cuts in the real estate market. And again, this stock market weakness does not signal economic weakness, right? People are pushing for rate cuts, but the prices are crazy. Like the prices have gone up so crazy high in real estate that they need to correct. Inflation has gone up dramatically. The only way to get around that is a recession. Um, yeah, let me keep asking AI what the. So we're looking about the emergency meeting. I'm gonna put the SPY up. Gold Also, look at gold. It's certainly crazy. Here's gold. All right, so there's no emergency meeting yet. Yeah, basically what people are saying is that extreme crowding in stocks, which is possible. I don't know. What's the catalyst for a bounce? Extension? I'm not saying we do. Like again, nobody knows. You guys know me. I'm pretty much against super definitive statements. You got too many people in the market trying to act like experts. And a lot of these guys have been saying we were going to crash for 6, 7, 8 years now, right? So I'm sure they're going to be acting like they were finally right for once. But remember, we're still probably above where they called the market crash. Hey, bro, here, you're going to have to use a different bathroom. Okay, that's fine. Go ahead. I need some coffee. Economy is terrible. It's only going to get worse. Maybe. Yeah, I heard about that, Sam. It's terrible. People have to learn when you play the market. There's no sure thing. 100%. Yeah, crash is inevitably going to happen. Hold on, guys. All right, love you. All right, guys. Yeah, so can you trust economic data? But unemployment is a lot worse. GDP is the only thing that's up, but even that is looked iffy. Well, there's a couple nuances to understand about the GDP. Number one is that it's the first estimate, it's the initial estimate for GDP. So, what does that mean? It means it's the least accurate, right? So, they're going to give you an initial estimate and then they're going to correct it over the coming months, right? So, every month you get a new revision quarterly. It quarters every 3 months, right? There's 4 quarters in a year. With GDP, the way it works is they have something called the initial estimate, which is the least accurate, but it's also the more influential one because it's the first stating of the quarter's GDP potential. The following ones, though, are usually much more accurate and correcting. So GDP, my point is, could even though we came in at 2.8%, and you guys know me, I'm generally a bull, but even though we came in at 2.8% for GDP, it doesn't mean it's not going to be corrected down lower than that. It's possible. Um, but again, though, also understand like the stock market and the economy are two completely different animals. Like in some ways, they correlate with each other, but this has nothing to do with the economy. This has something to do with the economy, but I guess my point is like this does not mean we're in a recession. Like what you currently see does not mean we're in a recession. Like the stock market being down big does not signal a recession, right? What it signals is the stock market being down a bunch. And maybe that means we eventually crash. Again, it's possible. Maybe that means we don't. Maybe it means we bounce back. Maybe it means we have a bear market. Like the last bear market, I'm trying to remember when the last bear market I experienced was. It was a few years ago for sure. The last time the market trended red. So the last time the market trended red, I want to say it was like 2020. Yeah, so this was the last bear market that we were in. So it was late 2022. So remember, in late 2022, I also want to put up late 2022. So this started in November of 2022. I want to put that up next to this, right? So yeah, so here's the last correction, and this wasn't a crash either when we got it, right? But here's the last major correction bear market we had. We downtrended for years up until 2023. So for about a year straight, let me hide myself here. Hold on. For about a year straight, we had a bear market. Like this was a bear market. We downtrended, bear market, really, really, really weak. Today we are at about this right here. So we have corrected this much. So this correction back in late 2022 was twice as big as what we're currently in right now. So here's what we're currently in. Here's the last major correction that we got. And so Again, a lot of this is due to the yen. Yeah. Recession-proof stocks. Home Depot. I don't know. I'm not. Don't buy any of these unless you want to. I have no idea what they're gonna do. Not an investment professional. Don't copy me. I would go with like Home Depot, um, Costco for sure. I think Costco is probably like a decent option to buy personally right now. Again, I'm not telling you to buy it. I don't know what the PE ratio is for Costco, but I think there's an option for it. I think it's cheap. It's probably not going to correct too much, but man, this thing's up a huge amount too. I mean, I don't know. It just dropped over 10% from 900s down to 800s. Costco thrives. They're thriving right now. I think they'll do even better. People are going to look to save money, and so maybe I don't know what Walmart's doing today. Walmart down to 65.70s. So and again, guys, since today we got a lot of people here, and it's just kind of a lot of people are scared. I'll say this: you can have whatever opinion you want. You really can. You can have whatever opinion you want. It's all love here. We can agree to disagree on things if we do, and maybe we do, and maybe we don't. Just be respectful. Don't be super negative. Don't be super insulting. Just be respectful, and you can state your thesis, and everything's all good. Uh, you got to change your channel from investing to history lessons about crashes in the real market. But I would correlate if we do crash, right? So again, let's give you a history lesson. So in 2000, leading into 2000, dot-com companies were IPOing and making billions and billions of dollars. This was kind of sparked off by Netscape. Netscape IPO'd in the mid 90s, and they were kind of the first internet company to change the standard of IPOs in tech, right? Prior to this, you needed to have a couple of years of profitability before you really could IPO. You could, but the standard was like, hey, it's not going to be a successful IPO unless you got a couple of years of profitability beforehand, right? Well, Netscape was like, nah, bro, I'm going to IPO anyway. And they IPO'd and they made billions of dollars pre-profit before they were really profitable. And this changed the standard of IPOs across the country. Anyways, with that said, a lot of other tech stocks jumped on that bandwagon following it and started IPOing and made billions and billions of dollars from it. Like a lot of companies got huge overnight from these IPOs, right? And this was all from the internet boom. The internet was a new technology. Anything with .com at the end of it was going crazy and making lots of money in the stock market. Well, eventually that bubble burst, right? And so heading into 2000, it was called the .com crash. This was the single largest bear market that we've had in a long time, right? We downtrended for years and years after this .com crash. Like here's the Nasdaq here, here's Walmart. We'll put both of these up. We downtrended for years afterwards, for years and years. So again, here is the Nasdaq. We can go back to 2000. We're gonna have to look at the S or the SPY. The SPY might let me. I can look at the S&P if I really need to. But yeah, the point is we downtrended for a while. We didn't really start bouncing back until much later. But okay, so here's 2000, right? And again, let me just so you can look at the chart itself. Here's the mania of the .com boom. This is what I would relate this latest move to. Here's the mania of the .com boom, right? So again, this is like Netscape IPO and all these other tech stocks going crazy. And then we had a huge correction. We dropped percentage-wise. It doesn't look like too much now because the percentages have skewed so much. Like right now, the Nasdaq is worth much more than this, so it's just different. But again, we dropped from over 150 down to under 80, right? So percentage-wise, in a couple months, this was a major drop. Or within a couple years, we were down huge percentages. It wasn't really some big flash crash. I would say, to be honest, guys, historically, big corrections, big long-term bear markets are riskier than a crash. Crashes almost always bounce back eventually. If a market like this can downtrend longer term, that's a worse situation because again, like look, we crashed here. We didn't really get back up over where we were prior to that until 2008. So 8 years is what it took to get back up to where we were prior to that. And even still, we didn't really break it. Like some other stocks took decades to get back to where they were. I think it was like Microsoft, was it? Maybe. Let me see. Some of these stocks took decades to get back to where they were. So you just got to be careful. Again, what I'll say is DCAing is your friend. Yeah. So look, Microsoft hit $60 in 2000. It didn't break $60 again until 2017, chat. 2017. And so dollar cost average is usually your friend. If you don't know what dollar cost averaging is, it means that you add to positions regardless of price in specific intervals. It's a safer move. Again, gold, the VIX, down monstrously right now, down to 24s. We are heading into a recession. What do you think will happen? I think if it's a really bad recession, number one, I think a recession is kind of good. I know that's kind of contrarian, but we need inflation to correct. We really do. Like prices have gone up so much, people are unhappy. Prices don't go down unless you hit a recession to correct it. And I know some people are not going to be happy and whatever, and I get it. But I don't think it's the end of the world. If it's a small one, I think we'll be all right. Um, it's an election year. There's a lot of unknowns. We'll see what the Fed does. As long as the Fed doesn't get crazy and starts to like I don't want, to be honest, I don't want more money printing to happen. I don't know. I don't want more QE. I don't want more money printing. I don't, because that's gonna directly spike inflation. Like as long as we can enter a recession and the Federal Reserve can cut rates, they can cut rates as much as they want. They can cut the federal funds rate. They can bring rates down as easy as they can in that way. I hope they don't do QE. I hope they don't do quantitative easing. Quantitative easing is when the Fed creates bank reserves and uses those bank reserves to buy financial assets like bonds and other stuff like that, right? And so that is a form of money printing that injects liquidity into those markets and allows banks and other institutions to more quickly lower interest rates to consumers, right? So it's more of a desperate sign, and it'll save us from recessions in some ways. But the consequences are the value of our dollar dumps. It decreases massively. Inflation spikes. Or I'm sorry. Yeah. So that's the big thing you want to be careful for. Yeah. Again, last year, uh, last week, what could also spark this again? We had unemployment, 3.4% or no 4.3%. We had non-farm payrolls show up at like 112. Let me look. I have it on screen. We had non-farm payroll show up at like 112. So they missed. Yeah, here's the payroll numbers. They showed up at 114 versus 175 expected. Last time was 206. Unemployment rate showed up at 4.3%. Last time it was 4.1%. So last Friday we had unemployment spike and we had payroll numbers go show a much weaker economy than expected. Yeah, I mean, again, look, yeah, so everybody's going to blame a politician. I'm here to tell you this. All right. The last 5 years have been different, and they had nothing to do with a politician. Politicians can make good, bad decisions. None of that matters, right? These last few years have just been different. Like the pandemic was not a predictable thing that any politician had any control over for the most part, right? Like they might have made some good and bad decisions, but we had a worldwide pandemic that basically caused a lot of craziness to happen over the last 5 years. And again, we can't really blame anybody. At the time, I still believe the right move was to print money. I think we needed to do quantitative easing. We needed to get interest rates as low as we could for as long as we could and really stimulate the economy in the middle of the pandemic. I think that was necessary. I agree with that. Now, I think we might have kept it going too long. And, I think we kept it going for too long. We should have started rate hikes much earlier than we did. And so we started rate hikes a little bit late. And here we are with massive 10% plus inflation over the past few years. And it's just a rougher spot now. But regardless, nobody can, like, the pandemic was the pandemic. Like, we can't really. And again, I'm here to tell you, if we didn't print money in that situation and cut rates, people would be really unhappy. We would have gone into a much, much deeper recession/depression situation. So it's kind of a pick your poison event. Like either way you go, people are going to be unhappy, right? You got to figure out which one is the best long term. And again, I do believe that what they did was, I don't know. Yeah, well, the market's bouncing back. Gold's bouncing back. The Nasdaq's bouncing back. The VIX is pulling down. So, generally speaking, we do bounce from these, right? And generally speaking, also right now, we're only down 4%. So it's not an end of the world scenario yet. Now every time we get big red action where we downtrend a big percentage, the crash predictors come out, and maybe we are in a crash. I'm not here to say we're not. I don't know. We'll have to wait and see. Hey guys, how effed are we? Well, we're early. Agree, money printing destroyed the economy, permitted mass spending. Yeah, well, what is your argument then in return for that straight? And it's all good. Like I said, brother, it's all good, man. We can agree to disagree on this issue. It's okay. It's okay. Uh, but what do you think we do in what do you think we do in return for this? Like we cannot print money, and that's fine. But what does the economy look like if we don't? And how do we save ourselves from the coming recession then? Do you think we should have just entered a much more deep recession in that period of time, let the market naturally correct like it should? I kind of can agree with that, but it's easy to look at that in hindsight as well, you know? And so, I don't know. Uh, Tough to say. Yeah, I mean, we're not in a recession or depression yet. Um, GDP is still somewhat positive. Unemployment's higher, but it's still averages pretty low versus the average of the last 10, 20 years. It's everything's not perfect though. We still definitely got problems, but we're not there yet. Maybe we do hit one though. I don't know. Yeah, for sure, Jack. He said what's happening now is just an unwinding of what happened. Yeah, AI needed to correct. It was never going to hold up there. Um, yeah, we do have ISM services PMI data coming out today too. Yeah, we're covering it for sure, Curtis. 100%. We're covering it. I agree with that, but this was way too aggressive to be healthy. Yeah, it's down big. It's scary for sure. We'll have to wait and see. Watch the market. Wait for my freaking coffee, bro. I haven't had coffee today, and it was a long night. All that happened was big banks and holders got saved. Yeah, yeah, utilities are okay. Like, yeah, let me help you out. Yeah, this keyboard is much more silent. All right, so consumer staples like Coca-Cola, Johnson and Johnson, Procter and Gamble. And again, I'm not telling you to buy any of these, but necessities, regardless of economic conditions, are kind of the sectors you want to buy. Healthcare stocks can be good, like Pfizer, Merck, UNH. Utility companies, so like Duke Energy, uh, American Electric Power. There's a lot of stocks that retailers like Costco, Walmart, DG. I don't know about Dollar General. I'm not a big fan. Gold is always like a hedge, so people hedge with gold. Defense stocks, maybe like General Mills. I don't even know if this is right, but yeah. So there's a couple stocks you might want to buy. Yeah, the SOM report. Yeah, the SOM indicator definitely says that we're trending towards it. I saw that on Friday after unemployment spiked up to 4.3%. It's what about the yield curve, guys? What about bond yields? Where are they at today? Somebody update me on bond yields if you can. Where are they at? The data comes out at 9:45 and 10 a.m. Yes, at 9:45 we got final services. Services is big too. It drops at 10 o'clock though, so we'll see what we get. But, yeah, I just looked at my Black Monday on my thumbnail and I spelled Monday Mondy. Kind of works though. It looks a little like a little ironic and sarcastic. Uh, did you get my divvy from T-Bill yet? I don't know. To be honest, I don't know where I see they pay me. Uh, I don't know where I can see. Let me see. trades. I want my T-bill. Where do I look on toss to see divvies paid out? All right, markets are bouncing back. Q's back up to 430 almost. Gold's bouncing back a little bit. The VIX is pulling back some, but still down massively. They're still up huge. Gotta have you through this, John. Listen, I'm here, guys. Listen, I'm here. And again, look, for those that might not have experienced corrections before, like these happen generally a couple times a year. They're not, number one, we're not in a crash situation yet. Number two, these generally happen at least once a year. Number three, prepare yourself in case something worse happens. That's kind of like my logic, you know. Like, walk quietly but carry a big stick. You know. All right, so what's the yield curve at right now? Yeah, I'm looking at. I can see my P&L in it, but like I just don't see. I can view trades. But that doesn't show me my actual positions. It shows me when I bought into it, which was mostly in June. I just don't know how to. Here, we'll figure it out. No, I'm in T-bill, TBIL. I'm trying to see. I'm pretty sure they paid it to me already, but yeah, I would use caution today. Where's the yield curve? I don't know, man. I'm trying to figure out the yield curve. I remember we got S&P Manufacturing and Services PMI. Yeah, I know the price of T-bill. I'm trying to see. Go to monitor account statement. Okay, gotcha. Hey, thank you, sir. That's probably that sounds right. All right, did you give me a coffee? So you haven't gone? All right, baby. Here, the opening bell's in like 15 minutes. Can I make coffee on that coffee pot? I don't know, but all right. It's all right. All right. Sorry, I'm coffeeless this morning. Hold on. I gotta put my big face up on the screen for a second here, chat. So bear with me. Yeah, so we are at the beach. Hopefully you guys are good. No, right now. All right. Yeah, I'm looking at it. I think it pays me today. It just hasn't put it in yet. So I don't see it yet, but it's all good. All right, let me turn this off. There we go. Yeah, I'm burnt right now, guys. I'm definitely burnt. Why is it super bright where you are? Oh, let me show you. Here, let me see if I can show you. We are at the beach. All right, guys. Again, 15 minutes. 15 minutes. Honestly, for Hurricane Debbie about to hit the Gulf. Yeah. So what did Hurricane Debbie end up doing, dude? I didn't even see it. Not Hurricane Debbie, but you know. All right, good. Yeah, so this thing ain't even gonna hit us. I was worried. Yeah. Yeah, this thing's not even gonna hit us good. Yeah, because we're in Destin, but man. Honestly, tomorrow I might stream from the balcony, which would be cooler, I think. When did it pay it out, Zanes? So it paid out 20. Yeah, it paid me like $300. I got about 1,500 T-bill shares. 1,400. So right to Colorado, and he's bad. Yeah. Yeah, honestly, like we drove here, and like we were worried the rain was just gonna be terrible, but it's not bad at all. All right, guys. Again, we got S&P services data. 10 o'clock. Flash. Services PMI data. So we do have. Hey, what's up, Jeremy? Nice, man. Welcome, bro. Great discount on leaks. Yeah, I don't have coffee right now, dude. I don't know what to do, bro. I'm about to go grab a Coca-Cola or something. I know it's horrible to drink. I eat well, I drink well, but on vacation I don't, and so I'm about to go grab me something. I need a mouse here. Hold on, chat. All right. I got a mouse here. I gotta use. You guys doing okay? I mean, I would ask you guys, are you red or green today? But I mean, come on, do I really need to do that? Everybody knows they're red right now, with a couple few exceptions. But I would ask. But break this? I didn't break my mouse, guys. No, my mouse. There we go. All right, we're good. We're in here. There we go. Push this back. That's the cash. Yeah. I even think we'll get a circuit breaker halt today. I think it's possible. Let's look at the levels that we might get one. I'm gonna close this window because y'all can't see the beach anyway, and it's also kind of distracting. No 1-year brokerage CD if available in Fidelity. Everyone flocking to save money. That is very telling. Yep. Yeah. Friday. Yeah. Yeah, you guys remember I liquidated stuff Friday. And again, if you're gonna be a market participant, you gotta be quick. And yeah, this is why. Again, we'll see what happens though. I mean, honestly, I'll tell you this, right? And again, I'm not saying that this is gonna happen this time, but I'll tell you this, bro. Every single time we have had a big red pullback and I've gotten scared, the people who buy that dip have gotten out like bandits, dude. People who buy that dip are much more successful. So I'm not saying it's gonna happen here. I genuinely don't know. But yeah. Yes, services PMI data chat today, 10 a.m. So we get services, PMI data, ISM services. Yep. Honestly, this is a big report, chat. It really is a huge report. All right. The opening bell's in 9 minutes, chat. I'm ready for it. Who you guys are too. I'm gonna title this. So this is non-manufacturing and services PMI data. All right, so we bounced back a little bit. Again, the real question is, do we bounce back more? All right. Yep. Let's get the pre-market stuff out. Oh, all right, guys. Non-manufacturing is also what services PMI data causes. This is a big report. This is the first big report that we're getting today, since all this crazy down action. We'll see if the market's even open. If the market halts, it's going to be because it breaks. If the market halts, it's going to be because it breaks over the percentage. So if it breaks over 7% is what it is. 7% is the percentage. They'll halt it once, and then if it breaks another 7%, then they'll halt it again. If it breaks 20%, they'll shut it down for the day, like completely down. Yeah. So prepare yourselves, chat. Prepare yourselves. Again, in 30 minutes, we got the data coming out. It's Canada holiday. Time to DCA. I'm kind of looking at DCAing too, but it's going to be small at first until the market stabilizes. And of course, me just saying that's going to make some people upset, and it shouldn't. Regardless of what happens to me, you should be fine. John, please make a session for these guys later how to properly place stops and types of stops. Too many losses in the room. Yeah, so again, this was sparked by a couple different things. If you're just now tuning in, this is sparked by, again, number one, this is sparked by the Japanese yen crashing. B, this is sparked by unemployment and payroll data looking weak economics wise. So payroll data came in very low. You can see it on the screen. Unemployment came in at very high. You can see it on the screen. And that's sparked this brutal move. This also comes on the heels of Nvidia, which is really what the whole thing dragging the market down. The VIX up a huge amount. Nvidia, though, is what is really just dumping the market. Like Nvidia gapping down this big percentage is really what scared everybody and freaked everybody out. We'll see, guys. We'll see. And again, we're going to day trade futures today, but we're also going to be keeping the stock market here and maybe day trading stocks and watching stocks. I think that's necessary. We're also going to trade futures. Well, it's not multiple choice fact. These are all things combined to give you what we've currently. Look at Nvidia correct. Nvidia just dropped $2 a share. See if the Q and everything else corrects. We got 5 minutes before the market opens, chat. Be ready here, guys. Be ready. Yeah, Nvidia announced delays in their Blackwell GPUs. Be fearful when they are greedy, greedy when they're fearful. Panic in Japan. Yep. Yeah, it's crazy. just prepare yourself. Again, guys, what I would say is I would let, you can make calculated risk, just make sure your portfolio's got enough for it. Make your own assessment, trade responsibly, chat. Just be smart. All right. All right, guys. We got 3 minutes. Again, Nvidia just fell $2 a share. Prepare yourselves. 2.5 minutes. How's my internet here? It's pretty good, right? John, what are you gonna buy? I have no idea, dude. I have no idea. I don't know if I'm gonna buy anything, to be honest. I might just wait. But again, I'm on vacation right now. I'm not really at my comfort place. Yeah. So I'm gonna do my best, but like I said, I'm on vacation. Kind of chilling right now. All right, ISMP my data coming out at 10. Prepare yourself. Hit the subscribe button, guys. We are going to put it in sub-only mode. We're not going to, listen, we haven't plugged anything today yet. We started late. But we are going to put this in sub-only mode. So the only thing I will ask is that you subscribe to the channel. Everything we do here is free. We don't charge for anything. I don't sell a course. I don't sell a service. I don't even claim to be a good trader. Everything we have is free. We're just a resource and community. We give you free data, free market news. We don't charge you a penny. We don't claim to even be good traders. It's here. So again, if you appreciate that, hit the subscribe button. We got 1.5 minutes left. Hey, thanks, Hidden. Do jiu-jitsu and trade. Jiu-jitsu's tiring. I wouldn't be able to look at computer afterwards. John, stay flat. Enjoy your vacation. Yeah. Brother, what about ISM services, buy or sell? I don't know yet. It depends on what the data shows up. ISM services are expected at 50.9% at 10 a.m. They drop in about 30 minutes. I'll put a timer up, but yeah, they're expected at 50.9. I don't think my timer on this computer is actually very good, by the way. But yeah, so we're not going to have our timer like we normally do. Yeah, I don't know if it's a buy or sell event for services PMI data. No idea. All right, guys, here we go. Here's the open. I'll be safe. 30 seconds. All right, guys, 10 seconds. All right, guys, let's do this. Here's the market open. Here's Nvidia and gold in the queue. We'll also put the SPY up here as well. I think we got to watch all these. So far, we have drops at the opening bell. So far, we have dips. Nvidia just broke lows right at the open. Retraced all the way back up, though. The NASDAQ bouncing back up. It's at 425s. Nvidia starting to spike up to 93s. It doesn't mean anything yet. Here's gold. I'm going to put something else up. Gold's not really I'm gonna put up the SPY. I'd rather see what the SPY's doing. SPY down to 510s. SPY's actually looking a little weak here on a 5-minute chart. Heading into the opening bell was much more red. The Nasdaq's trying to get back up here. I'm gonna put the 200 EMA and the volume weighted average up here. Yeah, 9160s. I think it's Nvidia bouncing. Again, we got to see some stabilization here. It doesn't matter though. Like the whole day could be crazy, so y'all be careful. All right, Q's trying to push up over the volume weighted average price. Nvidia trying to bounce as well. It would be crazy if we honestly retrace this whole dump. It's possible. I've seen crazier things happen where we decrease huge percentages and then we bounce all the way back up from shorts getting squeezed out. It doesn't mean it's going to happen today, though. And I would say the signs don't really show that. But again, it's possible. Again, we got okay, just to put this into perspective, chat. We do have some stuff showing up. So like we have regular services PMI at 10 or at 945, right? So we do have some regular stuff. I'll be ready. All right, so there's the Nasdaq fighting all the way back up to 427s. Nvidia up to 94s here. So we are getting some rebounds and stuff. SPY at 512s. Yeah. Honestly, I haven't touched a share this morning, to be honest, than anything else. I haven't touched a share. The way I see it, like if we're gonna dip, we're gonna dip. And like I don't mind holding through it. I might add some stuff down at the bottom. But again, most of this portfolio is long term. So like in long term is long term, right? Like people get scared. Most people, you know, it's funny. It's like, okay, like the reason almost anybody can make like 5 to 10% a year on average in the stock market, right? Almost anybody can, right? The reason a lot of people don't, and the reason a lot of people flock to like money managers and stuff like that is because they don't have the discipline to not touch it. Like they don't have the discipline to not mess with their positions. Right? Because like, okay, if you buy up the NASDAQ and the S&P and gold and real estate and you sit on that and you never touch it, that's going to be a highly profitable portfolio long term. But you can't touch the trade. You can't mess with it. You can't buy. But you can't sell. You can't freak out and sell. You can't get hyped up and buy. Like you just have to stay flat. You can't touch it. So yeah, but the reason a lot of people go to money managers is because they're not able to do that. They're not able to have that type of discipline themselves, and instead they end up messing with their positions and losing out on compound interest and everything. With that said, though, the Q's push it up. It's at 428s. Markets are starting to look better. Yeah, my portfolio looks better, but it's not like it was ever. Could be worse, to be honest. Like, I sold a lot of stuff, and it looks like it was the right move too. Everything else, I don't mind sitting in. All right, market's bouncing back a little bit. Nvidia's back up to 95s here, so. Hey, Carol. Hey, will you bring me just a little bit of milk? Like, I just need to cool this down. I need to drink this. Actually, I'm good. I'm okay. It's fine. It's not super hot. It's good. No, I'm good. All right, Nvidia testing the 200 EMA right here. So Nvidia at 95s. So again, Nvidia is the one you want to watch too. This thing is going to be the one that influences everything. John, is this the first reaction? Is not always the wrong reaction. Well, it's the saying is not the first is always the wrong. It's sometimes the first is wrong, but it's not always for sure. Sometimes the first is the right move, and we end up pushing up. I wouldn't say this is the first reaction either. I think the market's been down all day. It's reacted a lot to it. This is the first market hour session. We're really not up that much. Like, we're not up that much. It's certainly possible we correct and come back down. Again, if it was me, I'm watching like big moving averages. I'm watching the 200 EMA. I'm watching the volume weighted average price. I want to see if we turn. And again, right now the SPY is looking weaker than like the Nasdaq here. Here's the SPY in the middle. Nvidia is still pushing up, and again, the Q is more tech heavy, more tech based, and so it's trying to go up uh, more than the SPY is. But the SPY is not really looking the most green here. Look at our votes. Nvidia started to go though. Nvidia started to bounce. All right, so 52% of people said a crash. 48% of people said a correction. I'm gonna end this poll. We got thousands of votes, but I'm gonna end it anyway, and we're gonna do another poll. The poll is gonna be: are you bullish or bearish today at the opening bell? Yes, I want to see people's sentiment of the opening bell. The market's been green. Most people are bearish, understandably so, but I think you also have to look at extension too. Again, like, look, okay, this red action is going to be music to a lot of people's ears, and so you're going to have a lot of people that prematurely celebrate before we actually really like establish any real big thing here. Again, it's very possible that the market rebounds today and then continues down tomorrow and continues on the correction. It's also very possible the market rebounds today and stays rebounding. It's also very possible the market dumps today. Like, anything could happen. If it was what I would do is sit on your hands. Like, that's what I'm doing. Like, I'm not. You don't see me taking any crazy trades today. I'm just watching the market. This is a crazy, scary market. And again, you have to be smart. You can't. Yeah, you can't rush things, especially stuff like this. Yeah, they do emergency meetings, Thomas, for sure, especially in periods of economic craziness. Like this. Another interesting thing is we got the Jackson Hole Symposium later this month too, a couple weeks. So the Japanese yen crashed. Unemployment spiked up on Friday to 3.4%. It's just a delayed response. So like Friday, the reaction that we got wasn't super. Like, look, here is what do we do Friday? Red, right? Friday. So yeah, well, weirdly enough, like, so unemployment and payroll numbers showed up a much weaker economy on Friday, but the market basically held. I think this is probably the Japanese yen crashing is the biggest catalyst for this today, right? I know people are going to blame it on all this other stuff. Nvidia starting to bounce back too. Nvidia up to 97s. Oh, yeah, this is kind of crazy. A lot of bullish action though at the opening bell here. All right, so it looks SPY now over the 200 EMA. Nvidia bouncing back. Q is up to 430s. So we're starting to make. Look at Nvidia. Nvidia's dragging it back up though. Look at Nvidia on the right side, and then look at the SPY and the Q. Doing this. Nvidia, SPY, and Q making moves. Yeah. I might start to add some small positions here, but it's not going to be big, whatever it is. Yeah, I just bought a little bit of some stuff, but yeah, this is the first move though, and again, sometimes the first move is the wrong move, guys. And so I would just be very careful. A lot of people are going to really zoom in too much and think this is we're saved, and we're certainly not there yet. Like, we got to wait, guys. This is a waiting game right now. It's too early to say that. Mr. Crypto says it seems like a recovery, unless Bitcoin's bouncing back. It's too early to say that though. Like, this is the first 10 minutes after the opening bell. You know what I mean? Like, this is highly volatile moments. Bitcoin back up to 52s. So we're just too early to tell yet, to be honest. We just don't know yet. Very rarely do things crash like right at the open for on days like this. Most of the time, it's going to be like towards the like approaching the closing bells. Yeah, PMI data drops in 4 minutes, guys. We got a base form of PMI. We have non-manufacturing PMI dropping, and then services PMI. But I think we have flash PMI. Let me see what it is. So yeah, we have. All right, so yeah, we have in 4 minutes we have S&P Global Composite PMI and just base services PMI. The big one is ISM non-manufacturing PMI, but this one's expected at 56. It's a very important release. And then look at this dump. Nvidia is what you want to watch, chat. If Nvidia can make it back over 100, it's sitting pretty good relative to everything crazy that's going on today. If it can get back up to 100, it's sitting pretty good. That's a big if, though, and I don't know if I necessarily think it will. Yeah, far. It's a crazy day. Is the yield curve almost inverted or uninverted? Inflation is not under control. My favorite restaurant raised prices 20%. My insurance went up 25%. Yeah, I mean, still though, there's not always like, yeah. Food, okay, the reason that most of the time with inflation, they look at something called core inflation is because food is very volatile, right? So like your restaurant raising prices, like food is a volatile price category. What's up, Tiny? Hey. Thank you, John, the fam. Whole chat, stay green. Yeah, y'all too. Y'all be safe. Again, we're trying to let things play out. All right, so we rebounded a little bit after this dip. Watch Nvidia. Nvidia back up to 97s. Here, guys. So get Nvidia back up to 97s. Y'all be smart. All right, so it's significant reason the Japanese yen. We get a lot of people in chat. I'm reading the people in chat ask why the Japanese yen crashed. They crashed because they did rate hikes. They made the relatively low interest rate policy. Central banks raised rates to combat inflation and made the yen less attractive and with less attractive to compared to others with higher yields. And so in turn, it crashed and this drug into this market. Right, it's essentially what happened. Carry trade unwinding. It's been used as carry trades. Investors borrow it, and then massive unwinding has contributed to its volatility. Economic data also, and then the government over there and the Bank of Japan's actions. They did some rate hikes. And again, a lot of people, I'm going to say this again, a lot of people do not understand what a rate hike is. You got a lot, listen, and again, I'm here to tell you, if you watch somebody and they're calling every rate decision a rate hike, they don't know what they're talking about. They're brand new. And so you can watch somebody that's brand new that calls everything a rate hike, or you can watch somebody that actually knows what they're talking about. The choice is yours. Time to buy the dip. I don't know. Yeah, I'm holding SoFi. It's a small trade. All right, guys, we're starting to rebound back up. We're back up here a little bit. Honestly, my portfolio is really not that bad. I don't think I'm green on anything I'm holding though, except for treasury bonds and Tyson Foods. Tyson Foods somehow green. But glad I bought that treasury bond position today. They are brand new, very southern way. Yeah. The rest of the world doesn't use brand new. I'm from Louisiana, so like I know we have like we say we're fixing to go to the store. Hey, we're fixing to go get food. Hey, we're fixing to go eat. Let's go over there. But and so I know I speak a little bit differently, but my accent has kind of gone away for the last few years. Q's breaking highs here. Spies breaking highs. Nvidia broke highs. Not highs of the day, highs of market hours. And that's good still. It's still optimistic. I'm for it. I hope we rebound. Honestly, the best case scenario right now is if we bounce back. If we bounce back and the market rebounds all the way back up, but we still correct, not all the way back up. That's actually bad. Let me retrace what I was going to say. What I'm going to say is that if we bounce back like 60% of this move, but we maintain at least a small correction, that's the best case scenario for long term. That's what we need long term. We need stabilization. We needed a correction in microchips and tech. It needed to happen. We were up too much. But if we can pull back and have the correction we need now, and then continue as business as usual if we rebound a certain percentage today, I think that's the best case scenario for markets long term. Okay, so again, yeah, so the base services PMI data came out. It didn't really move markets, but it did show up today. It showed up. The big one drops at 10, though, remember. But it showed up at 55. 55 for services PMI. They expected 55, 56. So basically as expected for services. The big one is at 10 a.m. chat. Remember, the big one is at 10. I'll put it up on screen so you can see it, but again, it showed at 55. The big one's at 10, though. Here's their data release. Again, the big one drops at 10. Hold on, let me put this up. All right, so there's the report. Market so far likes this. Nvidia almost back up to 100 big milestone level. Nvidia is basically retraced about 50% of its drop. Like, is higher better? Is that good or not? This means strength or weakness in services. So higher is better, lower is worse, but this is about flat. Yeah, services came out slightly lower at 55 versus 56, but it's mostly flat. It wasn't some big release. Again, the big one is ISM data at 10 o'clock. We got 12 minutes before ISM data. That's the big boy, the big influencer. All right, guys. Here, what do you guys want? Should I use this? I can put this up too. I like this one better. Yeah, I like this one a little bit better too. All right, guys. So I'm burnt. You see, I'm burnt. Yeah, we're letting the data come out first, but man, market has just flown up this morning. Look at the NASDAQ here. Here's the SPY. Crazy, crazy, crazy. Also, if you want to check out my sponsors, guys, check out Apex. If you want to day trade, avoid risking your own money. Apex gives you a demo, and they test your skill with the demo account first. They also fixed up a lot of their problems. They just sent me an email saying they fixed up a lot of their stuff. Again, Apex is one of the most legit. They give you a demo. They test your skill with the demo account first. If you can pass the test with the demo, they fund you with a regular account between 25K up to 300K. And most day traders lose. I get it. You think you're going to be different. You're probably going to lose money. If you put up your own money, you're probably going to lose your own money, because almost all day traders lose money. But this is a way to limit that risk, learn how to trade for less, right? So they give you a demo and they test your skill in futures. In the futures market, you can trade the S&P, the NASDAQ. Patterns are very similar to blue chip stock patterns, day trading wise. And again, on the base one, they give you a 25K demo. If you can make 1,500 without losing 1,500 and following their rules, they fund you 25K with a 90% split, and they pay out millions. The other thing is that it comes with real-time data. And if you were going to buy a demo account with real-time data, it's going to cost about the same, which is if you use my link, this is $30. If you use my link, only $30 if you use my link and coupon code BT. A great way to help support the channel, and it's the best of both worlds. They give you a demo, test your skill. If you pass the test, you get 25K in funding with a 90% split. So you're keeping most of your money. It's similar to putting the money up yourself once you're funded. But if you lose, you're only out $30. Best of both worlds, and they pay out hundreds of millions. They paid out over $250 million since 2022. Check them out. Great way to help support your boy here in this channel. I appreciate it. I'll end up putting the link up here. Check them out. Again, we got data coming out in less than 10 minutes now. Less than 10 minutes. Use my coupon code BT. They are a sponsor though. They pay me money. I'm biased. They pay me money. Here, let me look this up. Everybody keeps talking about an emergency meeting. See if they're doing one. It should be trending topic. All right, so now they're saying they're not going to cut rates next month. Are they saying an emergency rate cut? Okay, yeah. Labor market. Yeah, so they're expecting an emergency meeting, but I don't know if we're going to get one. I'm going to stream it if they do, but I don't see anything about an emergency meeting yet. I checked the FOMC website. All right, guys, we're still pumping up, breaking highs. We look good. Yeah, I don't see much yet. Looking around though. Hey guys, 8 minutes. They're doing a 50 basis point cut next month. It's beyond obvious. Yeah, I mean, I don't know. We'll see. I mean, again, like the stock market and the economy are not a perfect match in that way, right? So what I mean is like this big percentage drop in the stock market isn't really like, now it's not really like this doesn't mean the economy is crashing. This means the stock market is crashing. And again, we don't really have a crash yet, but this means the stock market is correcting. I guess the point is we're not looking like the economy is crashing yet, but maybe we do. Again, I don't know. It depends. Friday, the point is Friday we had the same data. Friday we had payroll numbers come in low, unemployment show up high, and we had a flat day Friday. We didn't have some big red day in the wake of all that economic data. The data was mostly flat, or the market reacted in a mostly flat way to that data. And so today, the reason we're really down is because the yen crashed, right? Like that's why we're down. And the yen crashed because they did rate hikes to combat inflation. And so we'll see. And we're kind of bounced back already. It doesn't mean anything yet. It doesn't mean it's going to hold. We got to wait for the services PMI data, which is going to be the big report. Yeah, I think we should cut rates. I think we're going to cut rates in September. I think listening to what Powell said during the FOMC meeting last week, I'm pretty sure we're going to cut in September. I think that's an inevitable thing, unless inflation, with the one exception of if inflation spikes up like a crazy high percentage, that's different, right? But yeah. Check the CME watch tool. Yeah, we're probably going to cut next month. I mean, Powell said we were probably going to cut next month. All right, so yeah, next month it's looking like 91.5% of people expecting 50, 8.5% of people expecting 75. Yeah, and maybe we'll see. Doesn't look like a pause is even on the books yet. Let's see what it looks like closer to there. We got a lot of. So next week we have CPI data and PPI data. That's a big report. Yeah, they should wait. I think too. Sorry, Pawn. Let me pull it up, dude. I don't really have my old computer with me, so I'll see if Discord. Yep. All right, so the U.S. Fed has reportedly called an emergency meeting to decide on interest rate. It comes amid a global collapse triggered by the Japanese yen. Analysts expect the Fed to cut interest rates by 50 basis points after the meeting concludes. When did that drop, Pawn? This dropped. When did this drop? Yeah, I don't see anything else, so I'm assuming they're not posted on Twitter regarding the Fed. We got 5 minutes before ISM data comes out. Chat, 5 minutes. So here's the Fed. Nope, they didn't really say much. Where would we get the news, though? All right, look at NVIDIA. NVIDIA testing $100 a share. Yeah, I'm assuming they're not going to show it the emergency meeting. All right, so again, markets are up a lot since the opening bell, but it's not. Yeah, so again, the Fed's not going to broadcast the meeting live. Unfortunately, they're close to the public. They're not often immediately disclosed. Although they will put out a press release if they do decide to cut rates, almost certainly. This is big. Watch NVIDIA. If NVIDIA can get back over 100, we're looking much better. All right, guys. Hey, we got 4 minutes left. CNN reporting they're doing an emergency meeting with potential cuts if they do 50 basis points. Yeah, it's crazy. All right, guys. We got 2.5 minutes. Whew. All right, here we go. Let's see if services PMI can help or hurt the market. If they cut now, the market could really crash. Cut now is bad, means they're admitting they freaked out. Well, the whole market's down. I don't know. I don't think we should overreact. My TOS platform's working fine. I think the Japanese yen dumped everything, and that's why we're down big. And whether we rebound is up in the air. I'd watch NVIDIA, though. NVIDIA corrected all the way down to $90 a share, which is a massive, massive correction for it. But then it retraced all the way back up about 50%. And NVIDIA kind of is leading the market. And so SPY is up to 515. The Q is up to 430s. Here we go, guys. Got about 1,000 people watching. All right, you guys ready? Here we go. 2 minutes. We got ISM data coming out 2 minutes. Be ready. Here we go. Expectations, guys, are for PMI data 51.4. 51.4 is what's expected. Last time we showed at 40. Last time we showed at 48. This one's expected at 51.4. See if this helps or hurts the market. NVIDIA testing $100. Here we go. What time is it? All right, we got 1 minute left, chat. 1 minute left. Yeah, 1 minute left. Y'all be ready. $40 seconds. NVIDIA testing $100 a share. NVIDIA testing $100 a share. NVIDIA up to 100.2s. Guys, the NASDAQ is at 433s. The SPY is at 516s. Here we go. And waiting. Data should be out very soon. 10 seconds. 10 seconds, guys. 9, 8, 7, 6, 5, 4, 3, 2, 1. Here we go. And PMI data showed up. Waiting. 57. Or no, 51.4 as expected. Prices showed up high. Everything showed up higher than expected. More strength in manufacturing than expected. NVIDIA pushing up. SPY pushing up. Q pushing up. Well, we kind of rebounded a lot here, guys. Wow. Yeah, so we are bouncing back dramatically on this report. Wow. NVIDIA up to 100.5. The Q is all the way up to 536s. SPY back up to 520s here. Well, we're in a much better spot than we were a couple minutes ago, but we're still red, very brutally red on the day. I think if we can stabilize and not fall down more, that's the best case scenario here. Again, I'm okay with these pullbacks, but I think if we can stabilize and not fall back too much, that's better. But again, we came in as expected for ISM data, pretty flat. Here's the report right here. It came in at 51.4, slightly higher, I guess, than expected. Prices were higher too. There you go. Here's the services release right there. Yeah, the S&P Final Services PMI report came in at 55. So a little bit under expected. Expected 56. Man, look at Nvidia back up well over 100 here, guys. Wow. Look at this rebound. SPY all the way back up too. That's what I try to tell people is that people get so doom and gloomy so fast, man. It doesn't mean we're out of the woods yet, but we're getting better on the SPY. We're back up to 520s. Nvidia up there as well. So this is a historic move. On the downside, let's see if we can get a historic move on the upside. We're at 438s right now, chat. Dip buyers are riding out with the sunset here. Where are you the whole day, man? We missed you. Bro, I've been streaming for a couple hours now, dude. I just started a little bit late. I'm sorry, guys. We're doing our best. Yeah, it's a crazy day. Yeah, but the PMI data, Eli, is not really going to save the market like that. Like, it'll help it, but, you know. The dip. Bunch projection team. Tesla up 15 a share. Yeah, I think we're all back to good news is good news. All right, guys. Q's up to 438. Craziness. Should we day trade today? I guess we should, right? Oh, man. All right. Still got about 1,000 people here watching, so we're trying our best, but... I haven't really touched my positions. I haven't really sold either, though. So I didn't really sell this morning either. Believe it or not, my portfolio is pretty flat. Like, it could be worse today. It really could be. All right, guys. We're still at highs. We still got a ways to go, though. Video's looking too strong. I'm with Charles. Nvidia's too strong. Yeah, Nvidia saved the market back up here. Yeah, everything depends on Nvidia. You know, Nvidia's going to be the one that saves it. Helps and hurts is what it is. Looks like Apex got their social media back up, so. Whew. Man, what a day. Honestly, chat, what a day. Cost logged me off right when I was closing a position. Now it's worth half. Oh, I'm sorry to hear, man. Hey, well, nice. Far, you're good. If you're green on the day, you're doing better than a lot of people. Yeah, I mean, we're not out the woods yet, but we're definitely looking a lot better. You know, the SPY could still turn. The SPY's definitely not back out the woods yet. I would watch Nvidia, though. Nvidia just rebounded over 10% this morning. So Nvidia bounced all the way back 10% plus this morning at the open. That's kind of what saved the market. You know, a lot of this wasn't, again, guys, like, you have to think about the correlations. Like, every time big red action, all the doom and gloom, it's the end of the world scenario, people come out, and this is pretty consistent. I'm not even saying they're wrong. I don't know. But what we're really getting is Nvidia bouncing back here. You know, yesterday or Friday, like, you got to think about it, guys. Friday, we had economic reports. Friday, we had non-farm payroll data. We had unemployment data come out worse than expected, freaked the whole market out. But the market was sideways. So it's not like, You got a lot of people acting like today's crash was from the unemployment and the non-farm payroll data on Friday. I don't know. I think if it was, the market would have corrected and done this Friday, not today. Like the data came out at 8:30 in the morning on Friday. So if the market was going to correct like this, it would have done it on Friday, not today, right? So today's the yen. The yen crashed because of rate hikes specifically and a lot of other stuff. And so the market freaked out, and that's what this was. Now, it doesn't mean we're not going to continue to come back down. It doesn't mean that everything's all rosy and peachy and fine. Problems are still here. We'll have to wait and see. I personally hope we hold and hope we rebound, but anything can freaking happen. I would just be very, very careful today, to be honest. I'd be safe. I'm gonna even limit some more of my positions today. Now that we've rebounded a lot relative to where we were, I'm gonna cut a lot of these positions and get really light, just to protect the trades, and then maybe we'll add some back if we get some better movement here. But yeah, everything else I'm pretty cool with. Nothing else is really major like that. I think I'm just gonna sit in everything else. I don't really have any other. My biggest positions are like treasury bonds right now, so I think that's probably the move. Anyway, uh, is expending. Services PMI is out. It came in at basically a little bit higher than expected, as expected. All right, guys. So this is our funded account. We're up thousands of dollars in this funded account right now. This is a funded account on Apex. I'm gonna buy one dip at the micro Nasdaq here. So this is a look how volatile the market is. Wow, 2 contracts in the micro. It's risky here too, but big risk, big reward, I guess. We're down 50 bucks. Our max loss is gonna be like 150 on this trade. We're gonna give it some room enough to do it too. All right, guys, hit that subscribe button, hit the notification bell. Big pullbacks here. Close. And we're out. Well, we tried to give it a max loss, but we'll come back to it. We're up thousands in this trade. I don't want to give too much back to the market, though. I don't want to give too much back. Y'all just be careful. If the market's already rebounded a lot, and you know how the market goes. Sometimes it can be unpredictable and just mess with your head. So I would just be very, very, very careful. We're in another little day trade here. Again, we're day trading the Nasdaq here. I'm gonna add to this. Take 2 contracts. There we go. All right, we're scalping it. See, we're down to 80 bucks again. I'm gonna go ahead and cut that. So $85. And this is day trading futures. I'm basically day trading the QQQ. Again, if you want to check out a sponsor and day trade, learn to day trade. You're almost always going to lose your first couple accounts day trading. So you can either fund your own couple accounts, thousands of dollars at risk. It's super risky, sketchy. I wouldn't do it. Or you could try a funded account program. They give you a demo. They test your skill. You're still learning how to trade under pressure, but you're not risking thousands like you normally would. And if you lose the base one, you lose 30 bucks for a month. And it's not the end of the world. If you pass it, you get 25K in funding with a 90% split. And they've paid out hundreds of millions of dollars. So it's just the best of both worlds. Although, again, they are a sponsor. They pay me money. We're getting our first largest pullback of the day, guys. So this is our first largest pullback of the day. But if you want to check out Apex, again, I'll put the link up. This will probably be my last plug of the day. And yeah. This will be my last plug, my shameless plug for the day. Y'all be careful. All right. Market's pushed up a lot. I know it's late. Again, though, y'all just be careful, man. Y'all humor me and just be safe. Like, I don't want to see you guys lose money. I know the market's looking better right now. I know it is, but that doesn't mean anything to me. Anything could freaking happen here, guys. The market could turn all the way back down and dump. Nvidia could dump under $100, under $90 even, and really crash the market more. Y'all just be freaking careful, man. Like, nobody knows what we're about to get today, and this is just the opening bell. All right. We'll try to watch the market. Again, I am at the beach. I'm on vacation. I'm doing my best. I'm going to try to watch the market. Y'all just be very, very careful. All right. Y'all be safe. Okay. No, I'm not going to cover SoundHound. Sorry, brother. Yeah. Well, I mean, we're still up a lot. Again, this doesn't mean anything, though. Nvidia is what's moving the market, guys. Understand the real nuance, which is this. This right here, Nvidia stock is moving the market. Okay. This is what's moving the market. Nvidia pulls back big, NASDAQ pulls back big. Okay. Understand this. Like, that's what's going on. Nvidia is already down massive percentages in pre-market, and then it rebounded 10% this morning. Now it's less than 10%. And then it just gave back about another 3 or 4% just now in the last like 10 minutes. All right. Y'all be very, very, very careful. Very, very, very careful. I'm looking at the 200 EMA and the VWAP level. This is a really good trend line. So like if you stay above these two, you're usually in an upward trend. If you stay below them, you're usually in a downward trend. You can see an example of this on the SPY, where we're basically maintaining under both of these levels in a downward trend. When we break back over it here, like look, we broke over the 200 EMA and then we continued in this upward trend for a little while. I would look at that short term for trends. 200 EMA, volume weighted average price. They're my favorite trend indicators. So basically, I'd watch Nvidia to break underneath there. Once it does that, that's a sketchy thing. I would be very, very careful. It doesn't mean we're going to fall, though. Maybe we rebound all the way today, and I hope we do. But y'all just be safe, be good. I'm going to go enjoy my vacation. Y'all have a great day. Y'all be safe. Hey, I love you all. Have a great day. Be good. See you guys later.